Hello, everyone. Welcome to this week analysis or update. We're going to take a critical look at what the price is doing. And we're going to start with DXY. And the understanding of DXY is what we're going to use to navigate all other pairs. That's one good thing about DXY. I want to start from this structure that we have, that started since February 2008. And we saw this as a complete structure. The first structure that went up, this that came down as the wave 2 structure. And from here, so this is the first structure to the upside, the second structure to the downside, which is an ABC, more or less a regular flat. This is a regular flat, ABC, a regular flat to the downside. Then we had also this, a complete structure in itself as a wave 3, and a wave 4 in the middle, which is more or less a running flat as an A, B, C, a running flat, then the last 5 waves. So one thing we are sure of is that we are sure of this wave to the upside, and we are looking at this as a possible correction of the entire run from here to this point. And that is what we have said. So we're going to focus more now on what we are seeing here and how to navigate. When structure is developing and wave is developing on the higher time frame, there are a couple of possibilities that it presents itself. The corrective format we know can take any form, from 4 swing to 7 to 11 swing and nothing more. And so the way we are seeing this is a possible 3 swing up to this point. This is the daily time frame, please. So we are going to focus more here now. It's a possible 3 swing up to this point that we add this in the middle. 4 swing. We had this in the middle as a 1, and this went down as number 2, and this went up as number 3. And so we call this structure here an extended flat. This being an A, this is the monthly, this is a B, and this is a C wave. Now, this C wave, we are saying that this new structure may develop into a more complex correction or not. So we are entertaining that this may develop into a more complex structure, maybe a 7 swing. And it may not. So where the crash is always, the B wave is what we have to pay attention to. The B wave that is forming, because the B wave will always negotiate itself at what looks like a potential motive wave. And that's why wave 1 and wave 2, you don't know what it's going to give you, if it's going to run into a wave 3 and become a motive wave. And so the B wave has that ability to fool us. So we have to pay attention to the whole B wave, and if it's a B wave indeed or not. B wave is always in itself an ABC. And that's where we have to be very careful. So we're going to look at all of that and see what is possible. And if this is going to be 7 swing before it turns down or not. So we are seeing this as an A, 1 swing, 2 swing to the downside. The 3rd swing, this may be the 4, this may be the 5. If this one is the 6th, then that means we have 1 more swing to the upside before we turn down. Are we going to get that 1 more swing to the upside before we turn down? That is where we need to pay attention now. We need to pay attention now to understand that. Okay, so let me zoom in more for us. This is the daily time frame. I still want us to look at this structure coming to the downside. We are looking at it as a possible B wave, where these, after finishing A, B, C, we are seeing this as a possible B wave in itself that is developing into A, B, C to turn up if it's a B wave. And that will now be the seventh swing. That is one thing. So, but now, if this is going to be a B wave, if it's going to be a B wave indeed, that means this triad of A, B, C as a B wave to turn up again into another C to give us A, W, X, and Y. If that is going to play out, we are going to pay attention to this B wave. This B wave must do some things here. And if the B wave is not taking that, then we now begin to get weary that this, would it give us a 7 swing or not? And so it might be looking like this might not give us a 7 swing. Then we're going to look at what is possible. Because the understanding of that and at the levels that things will change is what we need to understand. If we consider this to the downside as a big A wave, and the movement to the upside to this point so far as a B wave, and we are entertaining that if this is going to end correction here, and then it might just be an A, B, C, and we are growing into the third wave. And if it's the third wave, really, the third wave here would also give us a clear 5-wave structure in this format to the downside to finish the C. And that is another thing. So the retracement from here to here on DXY and US dollar index is actually 50%. But for euro dollar, it's not even up to 50%. But regardless, it doesn't really matter. It doesn't really matter. So you don't, because, the thing is that in a very shallow correction, so you can still see a 38 in a shallow correction. So these are things that is happening in the modern day structure and Elliott, which is different from the old and a very primitive Elliott theory that will tell you, oh, we've won these, we've two has to be these. All that has changed because we don't clearly see, in some ways, it's just 3 waves that you'll be seeing and not up to 5 waves. And you must understand that kind of the change, because the Elliott saw his own count on stock market. But now, as it applies to other commodities like the currency, gold and all of that, we don't see that often, that you see a clear wave, a ABC, a clear 5 waves, ABC. No, it might just be 3 waves and, that you will see. So now, if we take this as the first move to the upside here as a W, the triad as a W, this is coming down ABC as one structure. This now, W will now become one structure. And this B in the middle will become an X structure if you're going to have Y. If that is going to play out for us to have a structure of W, X, and Y that will break this top, these could have ended as a regular flat. If it's going to end as a regular flat in this area, if it's going to end as a regular flat in this area, it wouldn't have gotten or taken like a 90 of these, 90 retracements of movement from here to here, and this old triad wouldn't have taken a 90, but it has gone beyond 90 retracements. So which has eroded the possibility of a regular flat that may take an 100 extension to break the top for us to have a Y. In that case, we now say, oh, the WXY is occurring as a regular flat and we are coming to the downside. Now, if we take a B wave, like in this case, we can see that the A wave started from here to this point, and the B wave went past A wave, and this is the B wave to the downside, also a triad A, B, C in itself to the downside that we always expect. Now, these had gone down to break low here, and what it did for us to give us an extended flat in this case, I might need to bring out my structure, my drawing, but then for you to understand what I'm trying to pitch here, let me bring it out. Now, the A wave, say from this point to this point, let me try and do something for you to understand that. Okay. So, and it ended here. So, now, the O structure ended here and the A wave went up to this point, not at this edge, not to this point. It ended and gave us a B wave, a triad A, B, C of a B wave. Now, the correction to the downside in terms of a retracement from the origin of that B wave in the yellow here, sorry, of the A wave in the yellow to the end of this A wave in the yellow. So to this blue area is 1, 2, 3. Now, it bounds off at the retracement of 1, 2, 3. So at that retracement of 1, 2, 3, it gave us an extended flat to the upside. Now from here to this point, giving us an extended flat to the upside. So we look at that. From here to A, as an extended flat is bouncing off exactly at 1, 2, 3 that we expect for extended flat. So between here and here, a retracement of 1, 2, 3, and a bounce again from here to a 1, 2, 3 of extended flat is what we saw. Now, if we now take this a old A wave here or a W that we call it, if it's going to be a W, let's begin to align like that. If it's going to be a W, and that this is going to be an X, so a regular flat, without breaking this point, could have just give us an 100 extension to the upside. Or this may come to the downside to react at 123 before going to the upside as again at 123. That is what we are expecting now. So in terms of from here to here, which ended W, what has this X done, this triad A, B, C, that may grow to become 1, 2, 3? What has it done? This is where we saw it reacting now at this level. So we can see at that level on the monthly. So I want us to pay attention. We can see at this level at the monthly. So how things can change. Now, if we want to know what kind of retracement to the downside of W is where the price is. So from that blue, which is the origin of our W now, to the blue up here, where W ended. So we see the price already is kissing at 90. So price breaking below this level would mean that 90 may not be it. So it's looking most likely from what we can see on this high time frame, that price will get to this point. And price getting to this point really, another thing I want us to see, if price gets to this point really, price cannot get to this point and eat back to go up. It doesn't form any sense in terms of Elliott wave structure to bounce up from here and to begin to go up. You can have an under retracement and a bounce up and it's going to go up. You may have some reactions and a pullback here, or we may have a deep, pullback. That is all probably we might see, a deep pullback and price will continue. Where do we expect that we may see a correction or a movement or a change of structure that may take price again back to this point is at 123, just like we saw between here and here, a 123 and an extended flat. So extended flat may still play out here also between a W and X to the upside. So at what point do we expect this? We expect this at this level of 123. Let me try and I'm going to use a yellow. I'm going to use a yellow because we had used yellow here. So at 123 is at this level. This is the level that we may expect price to come to react at this level and begin to, price is not going to make any sense out of this. So this is the yellow area that we expect a price may come to. If that happens, then we now have an X reacting here. Then in that case, what we may see is that price may now, from here, so this yellow now give us a Y at 123 here. These are possibilities. I'm not saying that this is going to happen. We had entertained that this may just be the case before now. We had entertained that this may play out before now. We are trying to look at if this possibility is still remote or not, if it can happen or not with the way things it's forming. I'm spending time here for us to see. Then if that has played out from this yellow back up here as a Y, then what retracement would that give? It doesn't have to play this. So that retracement will just be a bit above 61.8 to the upside, and it will bounce back to the downside from there. But that may not play out, because if it has done a triad, this possibility of this and this particular going well as a WXY may not play out. It doesn't have to play out. So we are looking at those levels. So which means that if price breaks this level to the downside, price will not stop at this level. Price will not stop at this level. Price will get to this level. So we are saying that there is a big movement that price may make down to this area. If this is going to play out, it's a big movement. And if price gets here and it fails here, then forget that price is going to now come to 161.8, because 161.8 is even very close to where this is expected to complete its structure to the downside and go to the upside. Because again, let's look at it. We said from here, from the A to this point. So this is 1, 2, 3 yellow here. Then we are looking at 161.8, which is around this area, because we believe anything between here and here can still give us an extended flag. In that case, it's going to be deep up here. Would that play out for that kind of a structure? If I use red here now, which is can still play an extended flag. That scenario, it's looking like it's not on the table. It will now form this again to the upside at the extended flat and further push 1, 2, 3 just a bit slightly up here to end around this area. Now, what I'm trying to say here is, if this is going to play out, we'll see. But price looks set. Once it breaks this level, price looks set to come to this point, and it's a big move to that side. So we are going to look at this as an how to plan our trade. So we see dollar still falling for about another 7 weeks, and this might not, dollar may not gain strength until after the US election around November, if there's going to be any strength come to the dollar. That is what I'm seeing with the news. The FOMC was it on Wednesday or Thursday, with the FOMC, with what has played out and Fed cutting to 50 basis points, it's a huge, the first time in 4 years, that is going to make the dollar weak. And that is what we are seeing, that this may fall and break this to the downside and fall. And when that happens, all we can see is a movement, a correction until we get to this point. So price may be breaking the low of 99. We may just get a reaction. If we get a reaction here, it might just be a pullback and until it gets here. So this will be a critical area. 97 will be a critical area for price to decide if we are going to have this to be upside or not. So that is, and price may just give us a very strong move to the downside to break this structure. If it breaks it and it closes below it, then you know that we are going all the way to the downside. That is what we can see here. I've done a whole lot here now to talk to us. So we're going to now see this structure in itself as a possible A, B, C of an X to go up. Is this structure giving us the allowance that it's going to push up from this level that it should not break? If it breaks this level, this is not going to hold the price. This is not going to hold the price. This is the next area that will hold the price. So we're going to look at this level on the weekly time frame. Or let's look at what is giving us on the weekly time frame. Now, on the weekly time frame, we are seeing this, like I said, as a possible ABC structure. That is what we are seeing as a possible ABC structure. That is an A, B, and a C structure. So, and the C structure of that B would also be a motive. The last wave would be a motive. So in the middle here, we saw a 5-wave structure to the downside as the first structure, which this is giving us technically a zigzag at least to the downside, because this is 5-wave to the downside, and this is a regular flat in the middle here. So when you look at this as an A B, you know, between A, B, C, you know, to the upside here. And then we're now seeing this as the wave to end this. So let me see something. Okay, let me bring this. So this is the first move of that last C. So this is the first move of that last C. So if this is going to be the first move of the last C and the second wave, this is wave 1, wave 2, and we clearly now see that wave 3 may have ended. Wave 3 and this is wave 4 may have ended here. So wave 4 may have ended here. So in terms of structure, this is one structure, this is the second structure, this is the third structure, this is the fourth one, and we believe the fifth structure is not complete at all. It is not complete. That's what we can see. And these may just be the end of this structure here. So we know what to expect if this structure is going to finish itself. So we are seeing this as an area that price is telling us is stalling for now. Let me use this in terms of the fourth wave. Now, but really, fourth wave has the potential from here to this point to come to this point here of 38, which this is very bearish, and it has failed to even come to that level. What we are saying is that if price even had retraced up to this point before now, which is around 102, 103, it wouldn't have changed anything. It wouldn't mean that price is going up. It would just mean that, oh, wave 4, it's a bit deeper. But now getting this, it's a really very shallow correction of wave 4, which signifies a very strong bullish, bearish move to the downside, because at the end of the day, these had marked up to more or less around 23.6 retracement, which didn't even get to this point. So at the end of the day, it's like 23.6 retracement. That is an overt weakness from dollar, not to even pushed significantly to the upside. And that is what has been happening with this first bullish sign, and we thought price is going to go up. So but at the end of the day, dollar has lost strength. Nothing is going to change if this even will go up to break this level and come here. Nothing will change for me. Nothing will change. It will still be wave 4 in the making, But with what we are seeing now, wave 4 may have ended with a break to the downside here. So we are still going to push to this point to finish wave 5. So now, let me zoom in more. Again, what I've said is that we didn't expect this to break this as a 90, which potentially may take the price up. So this is a 90, and this is the level of a 90 that the price, okay, on this time frame, maybe we can do more justice. Exactly, that's a 90. So a break out of that 90 here, a break below here tells us price will not be limited here. Price is going to break through here, and price is going to continue to go down. That's what I can see. Now, what we know about wave 5, you will think that wave 5 to the downside would be limited and this can quickly change. So you think wave 5 will be limited here, and price will turn to the upside. That is not going to play out because this wave looks set to be extended once it breaks down here. It's not going to, go down easily. So we are seeing signs of weakness from the dollar and what is going to fail. So this looks set to hit this point, and probably we might just have a bounce. If that is going to happen, we might have a bounce. If we have a bounce that is going to go up from here to this point, then it's not going to be anything but a wave through correction to this move to the downside. That is what it can be. It's not going to go up here and break anything. So, but this is not complete. So what is possible for now is that dollar may hit this level to finish this structure. But in terms of we having a Y to the upside, we must hit this level to have a Y to this point. Once the price breaks this level, it can give us like a possible, regular flat to the upside. It cannot once it breaks this level. So if price breaks down here, touch this place, and we head to the upside, it's not going to break the top. It's just going to be a wave 2 correction to this as a 1, 2, 3, 4, 5 to the downside, then a 50 or 61.8 that will not break this level and price will fall again. That is what is possible. So we are going to begin to look at what is possible here. So you don't expect that, oh, price may come here and begins to react. You must understand when it's reacting here, it's not reacting here to go up, because for a WXY, it has to react here to give us a Y. So it's not going to react to go and take the top. It's going to react to this wave and correct it as a 2 and drop further. And if that happens and price is going to correct deep to correct this as a 3-1 and a 3-2, price is going to fall sharp. But if they try to continue to just go up and extend and they get to this point, then we may now be probably looking at the possibility of price going up to break this. So these are possibilities. But for now, price, once it breaks this level, it's not going to rest until it hits here. So if it hits here, it doesn't have to stop here. It can break it to the downside. So if you have been selling, I think from around this area, it will make sense to relinquish some positions around this area with your stop loss around this area and guide whatever is going that is remaining of your trade to see if we are going to glide here, we are going to get a bounce back to break structure to go up and correct this as a 2 and a fall again. So with that said, on a DXY, we are going to take this to all other trades that we are anticipating. So on the euro dollar, what do we have? On the euro dollar, this is the weekly. It means that if we have been buying from here, this top is where we should relinquish our position of buy. And if we have a more shallow or levels that we picked around this area, our stop loss should be around this area. If price is going to go further, that is what I can see. So it will look nice to relinquish some positions once the price hits around 1.12750. Relinquish some positions there, which you have been carrying from the deep air, and your stop loss of new position. So if we get any retracement, you take a buy. That's what I can see. In another retracement or a correction is to get a buy. That is what I can see here. Correction, get for the buy. So let's look at the 4-hour time frame here. So this is going up. It's going to break this top. Already on DXY, it has broken the top of what it did here. I think this may have finished its correction here as the possible fourth wave. A, B, C has finished, and this is going to go up. And what is important now at this level is not taking the top at this level, because price is destined to bust to this area now. Price looks destined to hit 12750 now. So that is what I can see. And hitting that area, then we will now know what you have carrying from here, how deep it's going to go up and take some other structure. So now, if we look at Nzdusd USD, what is playing out here? For Nzdusd USD, this is a bit, it's a bit funny from Nzdusd USD. So we are saying that if we look at the index of the Nzdusd USD, so if you look at this had played out like a 1, 2, and this had played out like a 3, a 4, a 5 structure. So we are taught that this probably is going to give us an A, B, C. But in this kind of format, this ABC structure, this is where I want us to open our eyes to some things and see what may likely play out here. It's very important that we see what may likely play out here. So you will see that you will notice that this has a 1 and a 2. The inside structure of a 3, a 4, a 5 has finished itself. We expected a more deeper ABC that will be like the second correction for more upside. But this had more or less been a very shallow correction. So let's see. In terms of retracement to this point, we are going to use this to understand what Nzdusd USD is likely to do. I want us to be very careful with this. So this just barely broke, a 38, a 40. Okay, it didn't get to 50 or 61.8. That's the first thing. But in terms of trying to see a correction of fourth wave from this area, to this point, price didn't even hit a 50. So it's floating inside, in between. That's the first thing again. So the structure looks that is changing around this area. And what the structure is looking like to me, because if I go to the weekly again, let me go to the weekly. Yeah, I don't even need to go to weekly. So you can't take this as a wave 2 here, this level, and take this as a wave 2, and you think this is a wave 4. This is not a wave 4. This can be a wave 4. So you don't expect this magnitude of correction to be a wave 4 when you are seeing a wave 2. So I believe that this move had finished itself. So as a wave 2, that may drop more low before we go up again, because that's what I'm saying. Technically, we are seeing a more complex correction that may unfold here. This has done its bid and has finished itself as a possible A or 1. And we are seeing this unfolding. So this may go up to give us, an extended correction to the downside for a wave 2. So what is possible here now is this. On this has broken this. I may well have just taken it out now. I think if we have been buying from this low on NZD-USD, once price takes its top, we should just close it and probably try to look for if we can get a sell. The structure is different here. This does not look like a wave 2. It's rather too shallow for a wave 2, but we're going to look at it. It's a 3. We may see a flat. Then we may see a flat as an ABC, because this is like an ABC and a 5 structure to the downside. And this may just go up more and drop the last 5 waves to the downside. If we get that, we may sell it and take a buy again. So we are still going to go up, but we don't have to waste our time here trading these. So let me take this out. So we want to see this new structure developing here. Let me use this, or a yellow. Okay. So it means that from here now, we are seeing a new structure trying to build. Okay. So what we may expect here is a 23 to the upside, just like we saw with DXY. We may get a 23 to the upside. If we get a 23 to the upside, so which is around this area, you should be, if you are buying, you should be finding your exit around this area once you take the top. That is what it's looking like. And if we take that up, then once price breaks this level, it means that price is going up again. So it may maybe just be a wave 3 that is building. But for now, I won't call it a wave 3 with what is forming here. So this is the limit. If you exit around this area, this is the limit that you can expect price to still turn to the downside. So now, if we get a reaction around this area, then we should be expecting an extended flat to the downside from here to this point. We may just see price hitting this area later to bounce up, and that may look more likely to play out around this area. You may just have that around this area. So that may just play out before we go to the upside. So, but we are looking for an exit now. That's what you should be looking for. Look for an exit and try to sell from here if you can get a trade setup to sell from here. So with the understanding of what we saw on the NZD USD, the New Zealand index. So let's go to NZD USD and deploy that. So with that understanding, so what we see now is that this is not playing out anymore. So what we see now, this may just be an A. We should allow this to take the top. I think it's going to take the top from here. It may take the top from here. So a 90 is where a regular flat is still possible. I didn't check that with the NZ, the New Zealand dollar and New Zealand index. So we need to take this to the upside before we anticipate this move here. Okay, so once we break out of this area of 62,800 to the upside, then you will be trailing your stop loss if we have been buying from here to exit just before this area, maybe about 5 pips before this area. You can exit and try to pick a sell. And the limit that may give us now, if it's going to give us an ABC, it will now be this area here as a limit to sell again. Maybe I should just use something else. Right. What should I use now? Maybe I should use this color green for this one. So we are trying to look ahead, the possibility of we having an extended flat to the downside if it's going to give us. If we saw reaction around this area, then we can see a regular flat is possible to the downside. We will need to take the daily candle to the downside and break it before we say, okay, yeah, we're going to have a regular flat to the downside. So if that happens, either a regular flat or an extended flat, we are still looking at the possibility of getting an extended flat from here. Then the price would react around this area. So we are going to watch out for whatever is going to play around New Zealand dollar, because price may fall deep and you get confused what price is doing. So what we are saying now is that this structure is completed, and with this move, it's a corrective move, and which may give us a more deep correction. So this is still shallow for a 2 to the up downside. So we need to get a reaction the way this is going around this area or around this area as we break structure, maybe around this area, 5 pips before this point, to relinquish position, to look for a sell. And if we get a sell set up around this area, this is where we are coming to. So we'll see how that plays out. But Having said that, a whole lot may change here, so we need to continue to look at it. But, you know, as soon as we break up from here, be looking for area to just relinquish your position from the deep to catch other possible trade. Now on gold. On gold, what do I see on gold? Gold structure is an interesting structure now. That's become very interesting. Let's go to the monthly time frame now. The monthly time frame on gold, it's very interesting. Very, very interesting. So this is too bullish. Very super bullish. With this way it's going, this is super bullish. We may have thought that, okay, a wave 3 and this is a wave 4 of the 3, and we are seeing a 1 and a 2 again, and the third wave. So this third wave, it's like it's not ended, it's growing. So we are taught that we're going to get reaction around this area and come, but this has broken structure to the upside. Let me bring out the drawing here. So this is the area that we had this, and we thought we are going to slide down around 25.50. This is around this area, and this is 161.8. This is 161.8 here. So price had broken 161.8 to the upside. So with this kind of a bullish move, it has closed above it. If you look at, this is monthly. If you look at let's look at the weekly time frame now. So this is the weekly time frame. So price closed above this, not with a wick to the downside. So there's not a clear rejection around this area of 161.8. When you look at this as a 1 and a 2, a 161.8, price gave us this, and it's going to close like this. If this is a weekly candle above this area, tells me price is not going to go down until we get here. So anything that we see as a correction, we are going to take a buy. That is what I can see here, a correction for a further buy. And where these can get to is actually funny. Where this can get to is funny. So we don't know where this can get to. So I want for us to see the possibility here. From here, to 1 and to 2. So this is 161.8. This is where a 2 is, and this is where 261.8 can get to. So on gold, you need to be careful selling. But again, we need to be also looking at what the XY is trying to do. So are we going to get reactions around 27? Price is going to negotiate this 2738 or 2740 area. Price is going to negotiate, and a close above this area, this is the next place we are going. So we need to see that, because this wave 3 is not just stepping down. This wave 3 is not stepping down. From here, wave 1, wave 2, this wave 3 has been growing up and up and up. It may just continue to go and go up. So we need to draw a trend support and see the way this is going. So all you can do is to look for a correction and take your order to around this area. Watch what price is going to do around this area. You know, price would need to take structure to the downside before we can say that we are going to have a deep correction. So that is not what it's looking like. And with the fall in the dollar, this may just continue to fly to the upside. So on the daily time frame, let's look at what we can see here. We did we saw that reaction around this area. You know, after we broke here, this is around the area that we said we might get a reaction 2, 4, you know, where's the area? 2, 5, 5, 50 area, 2, 5, 5, 50 area, yeah, around this area. So, you know, price broke above it, and we saw a reaction at exactly 2,600 around this area. And with this reaction, we are taught that price may follow through and continue to, but it failed with the news and the cut of FEC, and price went back up. So this is a bullish move, and we are going to go up. So all we can, so we are seeing a retest around this area already. So you don't want to sell this. It will be disastrous to sell now. On the 4-hour time frame, what can we see? On the 4-hour time frame, this is still going up. So you can see this is still going up. This is still going up, and it might just continue to go up. This is a new structure building. After this correction, a deep correction. So we are seeing a 1, 2, 3 formation, maybe probably a 1, a 2, the third wave formation, probably going to get a fourth wave, and it's going to continue to go up. That is what, so you're going to look for a deeper correction to buy this more. That is all you can do with gold now. And this will not rest for now until it climbs up another, how many pips? Because I believe this is the next destination. This area is the next destination. That's huge. That's huge. That's about over 1,000. So that's over 1,000 pips to get to this point. It's over 1,000 pips. It won't rest until it gets there. Are we going to get a reaction or not? Once we take it above and we close above it, we are going up again. So, but if we have a reaction around this area and price will come down to retest that area, if price breaks correct, because that is what happened here, because we must understand, price breaks this level, which is a very important level, a psychological level. Price breaks it, react and correct. The correction is what tells us that it's going to continue to go up. So if we see something like this around this area, price breaking and correcting is going to, even if price corrects below it and breaks it with a strong momentum, then it's going to go up again. So that's what we can see on gold. We are seeing in a buy gold. Don't want to sell gold now. And there's no clear indication that gold will be coming here next. So if we are going to see anything at all to say gold would give us a deep correction, so gold will need to take this level. Gold will need to take this level, which I don't see for now. Gold will need to take this level out. That's the level that gold will need to take out for now, which I don't see it playing out. Gold will need to break that. So let's allow it to load. Gold will need to take that out. That's the first place that gold will need to take out. Then gold would also need to ultimately take this out. That's a weekly support. So that's a weekly support. That's the first support here around this area, which gold will need to take out. You can see it it's a weak support here, which you cannot see correction. So we saw a small correction here. So this will be a big area. Price breaking this with downside, it's a bigger correction. Then we are moving down. But for now, price had done its correction here, lifting up. Price is not coming here again. This is going to go up. Probably any correction, ABC correction, go up. ABC go up. That is what I can see from here now. ABC go up. On the 4 time frame, nothing for now. We are still bullish. So we are still bullish with this. Still very, very bullish. That's what I can see. Still very bullish. Then on USD JPY. These are taking a whole lot of time today, but I think we just need to see that. So USD JPY. So I'm looking to trade this. We are seeing elements of weakness in the dollar. So if we're going to take this, I rather want to look at this as a possible A move, and this move may not have ended now. So we may just be going back down to break this low. We should be checking around 137 area or thereabouts for a potential move to the upside. Around 137 area. That's what you should be expecting. This may just be a first move on A. This may be an A, B, C. It may just give us a running flat for the downside. So potential, this might just be an A, B, C, a sharp move up here, A, B, C, for more downside. So I don't want to, if it continues to go up, I don't think it's going to take this structure before it goes down. If it should break here, then you can say that, oh, you can look for a retracement to buy from here. So from what I can see here, it's not going to take this before it goes down. And I would rather want to sell or to buy from the deep if that happens. That is all we want to do here now. This move, it's a big move to the downside. It's a big move to the downside. And I want to believe that this is still continuing, it will continue. So around this area, we can look at this in terms of this. Let's see. If we consider this as an A move and a B to the downside, a 1, 2, 3, a 161.8 area. Okay. This is actually reacting around 1, 2, 3. Okay. Okay. If this is an A wave, this is a B wave. It's actually reacting around 1, 2, 3. 1, 2, 3, 1, 2, 7 area. That's why we're getting this reaction. So with that, price may be going up, but I don't want to do anything here really. Price may be going up. If price should go up from here, then we can expect to sell another weight and see all the nonsense that price wants to do here, because price may still come down. Then I may want to sell from here if it continues to break up. It's because of the weakness that I'm entertaining on the dollar. That is why I'm being careful now. So this will be an area to look for a further sell. The price should come up here. That would be an area to look for a sell if this should go up. You need to be very careful. So this resistance area will be around area that you want to sell again. The price would go up. Let's see how this closes. This is going to close in a weekly. The weekly candle, how it's going to close here. So if this one will pull back without breaking, so let's look at it. So if this candle is going to close like this, then I might just look for a pullback to buy. Not to buy at this level, but if I can get a pullback to buy, I'll be looking to buy to that level, then sell again. So I might just take a small risk and to see if price is not going to break down immediately, because this is a good area. If 1 to 3, we might just have an extended flat to go down. So with that, I've come to the end. So do have a profitable week. Bye.